if you want to invest like a pro, like, it's a few things you got to understand. First thing you need to understand is there's a strategy out there called dollar cost averaging. You probably heard of it before. Essentially what you're doing right here, all you're doing is investing the same dollar amount, $100 per month. No matter what happens in the market. That's what you're doing. Okay, that's what dollar cost averaging is. That's the whole entire strategy. I'm not going to over explain it. That's the simplest way. If you do that, you understand this strategy right here, you're going to win. Here's how that works. So let's say you start here, right? Or let's say the market is doing this. And let's say each one of these right here is a month. Every month, you buying at these prices right here. It's basically an average amount. That's what you're gonna get. Okay, you're gonna average, okay, over that amount of time, because there's gonna be highs, there's gonna be lows. Okay, you're investing money no matter what happens in the market, and you're gonna be able to get some of those lows, right? You're gonna invest. You're gonna be able to get more when the market is down, right? And you're gonna be able to invest or buy less when the price is at all-time highs, right? That's how you win. You buy low and sell high. Okay, but in this method, we never gonna sell. Okay, this is dollar cost averaging. We're just gonna keep doing that. So that's the first thing you gotta understand. The second thing you need to understand when you do this method, you need to understand what an ETF is. Okay, this is how we're gonna invest like a pro. This is how we're gonna become wealthy, right? Everybody that knows what they're doing is doing this. Okay, no matter what they're doing, if they're trading, right? If they're in real estate, if they're doing a whole bunch of other things, right? They are also doing this. What is an ETF? That is an exchange traded fund. All that means is it is a fund that trades on the stock exchange. So what exactly is an ETF? What exactly is an ETF? An ETF, right, is a basket of stocks that typically tracks an index. So what you're going to hear all the time, okay, everybody refers to the S&P 500. You probably heard of it before. You ever heard of S&P 500? You ever heard of the Dow? You ever heard of the NASDAQ? Those are the three main indexes that most people follow and track. Here's what's great about this, right? Here's what's happening. You already diversify. So when you buy an ETF, you buy a basket of stocks, you already diversify across multiple stocks at one time, depending on the type of ETF that you get into. If you get into something like the S&P 500 ETF, like VOO, right, or SPY, okay, that's 500 of the largest companies in the US. That's what you're gonna get access to. So instead of buying 500 separate companies, all right, we know how expensive that is. If you look at how much Google is worth, Apple is worth, Amazon is worth, you look at how much those companies cost individually, that's gonna run you a pretty penny. That's why people think it costs a whole bunch of money to get started investing into an ETF. Nah, you can get started investing into an ETF with $1 if you wanted to. Okay, this is how easy it is. This is how simple it is. But most people don't do it. Number one, because they don't know, and number two, because they don't believe it works, and number three, because they think they need a whole bunch of money. And specifically, let me tell you about this. Most people don't know about this. This is a hack. Okay, with things like the S&P 500, it's managed, right? It's managed, so it's a passive investment. What do I mean by that? So if there is a company inside of this, right, inside of this ETF that isn't performing up to the standards, right, they're going to take it out of the fund, they're going to take it out of the S&P 500 and replace it with one that is meeting the standards. That's a major gem. You don't even have to do anything. Just keep investing every month. You don't have to do no research. The big companies, the big analytic team are doing the work for you, and they're exchanging out bad companies for good companies. They want it to do well for your sake, for the investor's sake. So with number three, okay, everybody says Do your own research. You probably heard that before. You probably heard people say this is not financial advice. Do your own research. This is not financial advice. Do your own research. Well, let me explain to you how you're going to do your own research. And it's not many people that's out here telling you how to do that, that's showing you how to do that. So I'm about to show you how to do that right now. Here are a few things that you need to understand about the ETF that you're investing in before you start investing in it. At least you can be knowledgeable of what you're getting into and know exactly what's happening. All right, so the first thing that you need to understand, okay, let's call this ETF Research. And this is gonna have to be a whole nother video. So I would definitely do a breakdown in another video on exactly how to do this. But these are the 4 things that you need to look into, okay? Number one, you need to look at assets under management, AUM. You want that to be at least, okay, let's just say 100 M's, $100 million assets under management. They need to be managing at least $100 million. That's a very serious ETF. Okay. Number 2, you need to understand the expense ratio. How much does it cost? Okay. VOO, the last time I checked, was about 0.03%. So what that means is every $1,000 that you invest, okay, that's about 30 cents, okay, in expense ratio. The next thing that you need to understand, okay, and that I like to look at is performance. I like anything that's beating inflation, period. Okay, so you know, if it's done anywhere between 8 to 10, okay, greater than or equal to 8 to 10% over the lifetime of the ETF, that's great to me. All right. And then lastly, what you want to look at are the holdings. This is what the ETF is invested in. So when you invest into something like VOO, okay, you're going and SPY, those are basically the same thing. So you're going to see some of the same companies, right? You want to make sure that you understand what each ETF is investing into. So let's get to the next thing. Now that we know what dollar cost averaging is, now that we know what an ETF is, and how that works and what we should be looking for, the next thing that we should be looking at or trying to figure out is our plan, right? Is our strategy. How much are we going to invest over a certain amount of time? So for example, I'm gonna write down a couple plans that you can possibly follow, all right, that you can do. All right, so if you start with $100, and I'm assuming, right, this is assuming that you start with $500, right? You have $500 saved up, you open up a Roth IRA, you put in $500, and I'm assuming that you earn at least 10% per year and you invest it for at least 30 to 40 years. All right, let's just say 40 years for this video. So if you start with $100 and you do what I said, you start with 500, right, already invested in the account, and then you contribute $100 per month and you earn at least 10% per year for 40 years, that could turn into $659K. Okay, if that's good for you, that's good for you. That's a good place to start, right? Especially if you're younger, especially if you're just getting started, and you want to do something, you want to put something in place, right, to secure your future. That is a good start. Now let's go to the next level. If we do $250 per month, okay, and you do like I said, you invest over 40 years, you earn at least 10%. That's going to turn into, check this out, 1.6 million. So now let's say you do $500 a month. Okay, you are now fully funding your Roth IRA, $6,000 per year under 50 or $7,000 per year over 50, right? So investing $500 per month, assuming everything stays the same, that could turn into 3.18 million. That's what everybody should be striving to do. Okay, that's going to give you the ultimate upside. Remember, when you invest to a Roth IRA too, all of this is completely tax-free. The government's not going to be able to tax this because you're in a tax advantage account where your money that you invest grows tax-free. Let me recap. Now that we know what dollar cost averaging is, now that we know what an ETF is, now that we know what to research when we're looking at an ETF, now we know the type of plan that we want to execute on building wealth. Now we need to know where are we going to do this. Where are we gonna put this money? Where are we gonna open an account? Where are we gonna open up a Roth IRA? What platform, what app are we gonna use? My all-time favorite and the one that I use, M1 Finance. Now, I could do a whole breakdown on this video. Y'all gonna have to let me know in the comments. Of course, if you want me to do a whole breakdown on how to work M1 Finance and how to be able to open up a Roth IRA and how to start investing and how to pick the ETFs and all that stuff, let me know down in the comments if you would want that video, right? But this is my favorite, and here's why. Here's why it beats everything else for me, okay? Here's why it's so important for me, and I believe it's gonna be so important, or is so important for other people, especially for people that look like me, right? For the younger generation, for millennials. So check this out, okay? Not only are there no fees or anything like that, okay? So when you deposit $500 into this account, you open up your account, none of that goes to M1 Finance. All that goes to you. There's no fees. Not only do they have ETFs and stocks that you can trade for free, okay? No trading fees, no commission or anything like that. But here's the greatest feature of it all. It's called automation. Not many apps do this for you and allow you to pick what you want to invest in, right? Not many apps do this. I don't know why, but M1 Finance is kind of like the pioneer in this. They allow you to build your own pie. They allow you to invest into whatever you want to. There's no fees, there's no commissions, and they'll automatically invest it for you. Meaning that you can set up this whole plan, this whole system on how you're gonna be able to build wealth, how you're gonna be able to invest like a pro. You can set it and forget it and not even have to look at it ever again until 40 years from now when you become a multimillionaire. You wanna get started with that? There's a link in the description so that you can open up an account with them. There's a $500 deposit, but like I said, all that goes to you. So look, I just showed you how to start investing like a pro as a beginner. It's simple as that, those 5 steps. You got to understand dollar cost averaging, got to understand ETFs, got to understand how to research ETFs, and got to understand your plan. And then you got to get involved with an app that you like, and that's going to automate the process for you. So look, here's the truth though. It's not going to happen if you don't do it. I want it to happen for you. I want you to get started so that you can build generational wealth, right? And build that wealth for you and your family. So make sure you give this video a like if you got the information, if you learned something, and also subscribe. I'll catch y'all next time. But remember, believe in yourself, invest in yourself, and most importantly, love yourself. Peace.